Folks, one growth industry is on the move. 2020 is shaping to be an amazing year for the stock market. The Nasdaq is up over 40% year to date, while the S&P is up over 16%. That's a huge upside in comparison to the traditional 6% return the S&P generates on average over the past 2 decades. Now, there's been a few major catalysts in 2020 we shouldn't forget about. For one, the Federal Reserve's commitment to sustain market liquidity did a whole lot to keep the market above the 50-day moving average and continuing to make new highs almost monthly. Furthermore, tons of stocks benefited from the stay-at-home economy, and some of these companies will continue to grow regardless of what the world brings our way. For example, cloud computer services will keep growing as I predicted several months ago. Even after the pandemic and the momentum from Chinese retail markets and the substantial demand from the rest of the world will cause continuous demand for software as a service tech across the globe. The market for software as a service products is growing, and you can expect the growth to sustain. A report by experts estimates that this market will grow up to about $113 billion in 2021 from $58 billion in 2017. That's about 100% increase, or close to 100% increase in only 4 short years. And keep in mind, many of the software as a service services are subscription-based, and that means further growth and stability as the industry continues to expand and mature. And that's why today I want to focus on 3 companies that are starting to make headways and should continue gaining strength and momentum as we move into the next phase of growth for the industry that shows no signs of slowing down. The first stock on my list is Stoneco, ticker symbol STNE. It provides financial technology solutions. The company offers end-to-end cloud-based technology platform to conduct electronic commerce across in-store, online, and mobile channels. Stoneco is based in Brazil. In third quarter of 2020, the company posted its highest historical figures on total payment volume, total revenue, adjusted net income, and even more. Additionally, the company's revenue retention of about 100% with digital small and medium businesses clients shows that people are very sticky to its platform. People like the service, what can I say? The 1-year return is close to 100%, and estimates for next few quarters are very positive. The stock is trading near all-time highs, and I'm expecting more upside as the biz continues to grow in 2021. Currently, I've got a price target of $90 per share for the next few quarters. Next stock is Palantir Technologies, ticker symbol PLTR. Maybe I'm pronouncing it wrong. It may be Palantir. Palantir Technologies builds and deploys software platforms for the intelligence community, principally in the United States. Now, on November the 18th, the company announced a contract with the U.S. Army. Doug Philippone, Palantir's global defense lead, said about the deal that the Army's proactive approach in seeking out opportunities to deploy commercially available solutions has been instrumental in getting critical capabilities into the hands of warfighters faster. Typically, contracts with government agencies lead to big gains. Remember what happened to Microsoft when they signed their contract with the government in the 1990s? It was one of the biggest catalysts for the company, and I'm expecting big things from PLTR in the coming months. The last stock on my list of SaaS companies, the software as a solution companies, is Elastic, ticker symbol ESTC. Elastic is a search company. It primarily provides Elastic Stack, a set of software products which ingests and stores data from various sources and formats, as well as performance search, analytics, and visualization. It's based in Mountain View, California. The 1-year return for the company is 124%. The last 4 quarters have been positive. Earnings surprises have been good. In its most recent quarter, ESTC stock rallied after posting revenue growth of 43% year over year to $144 million plus. Within that, software as a service revenue rose 81% year over year to 37%. Plus, Elastic ended the quarter with $349 million in cash. On top of those numbers, the company also achieved total subscription of 12,900 for the quarter, and 650 of it annual contracts were worth over $100,000. That's big. Most importantly, those through subscription revenue made up 93% of the total revenue. That recurring income is predictable and suggests that the company will only keep expanding. Technically, I believe the stock has significant upside and can hit $200 per share in the next few quarters if earnings and growth continue moving at the same pace we've seen in 2020. And I hope that helps. Folks, Future of Wealth head trader Lance Ippolito just revealed how he spots trades with the chance to return upwards of 5 times your initial investment every single month. Not only does his strategy protect your portfolio from long-term volatility, but it gives you the chance to bank massive winners in just 24 hours. I've never seen anything quite like this before. With Lance's weekly blitz alert, you can throw your old buy and hold strategy out the window. And forget spending hours reading through pages of earnings reports and squinting at stock charts. Nobody wants to look at, your eyes will get all messed up. It's bad for you. To start collecting these 24-hour home runs, all you need to do is follow Lance's trading instructions the minute he issues a blitz alert. It's that simple. If you don't believe me, click on the link below to see his strategy in action. Do it now.